You take a look at Bitcoin, the cryptocurrency holding up over the past month despite the stock market volatility. So, Beakers, what do you make of this?
Well, it has surprisingly held up fairly well. I mean, it was almost a 70% correlation with the NASDAQ over the last month or so. That is starting to break. Now, what a lot of people are concerned about is they're saying, okay, you know what? Bitcoin promised to be this digital gold, and it's not an inflation hedge. My pushback on that is it was an inflation hedge, right? So if the Fed is going to tell you that they're going to crush inflation, then you don't need the hedge anymore. So everybody out there, it's driving me crazy, who says, Bitcoin's not an inflation hedge. What do you think about what happened when Bitcoin was ripping up to 70,000 and we were concerned about inflation before the Fed said, hey, we're going to crush it? So that, to me, is what's going on here. The Fed came out and said, we're going to crush inflation. Macro players said, I don't need that hedge anymore. So now one of two things can happen. We can have a narrative change where we're thinking something's going to break in the financial system, or inflation rears up. Look at agriculture today. Look at wheat and corn. Those are up a lot. You get another inflation scare. That could be the catalyst for Bitcoin.
Why when the Fed says we're going to crush inflation, does anybody believe them? I mean, all due respect to the Fed, but I mean, in this area of the world, in Bitcoin, which is a true sort of like anti-establishment, we don't believe, central bankers, et cetera, why would you believe that?
That's a great point. But what's happened over the last year with Bitcoin is it's become a macro asset. So every macro fund is trading it based on the economy, what the Fed is doing. That's why we're seeing in some of the other parts of crypto dispersion. You're starting to see smart contract platforms trade up when Bitcoin is down. But for now, Bitcoin really has become a macro asset.
Well, by the way, the Fed said they wanted 2% inflation. Well, guess what they got? So I mean, they got inflation, they got it in spades, and BK's fired up over this inflation dynamic in Bitcoin. I agree with that because, again, if anything, the pullback means that the Fed is in full gear. I'm going to almost be as animated as it relates to gold. People have been like, hey, what happened to gold? What happened to gold? Well, look, gold is up from 1,100 to basically 1,900 since 2018, late 2018. And I know that the move in the last kind of year has been sideways and it's now picking up momentum. There's an uptrend here in gold that by the way, absolutely holds. And it's not been stratospheric like Bitcoin, because I think there's different things at work here. But we always talk about where gold has a different argument for why you might want to own it. The core one is as an inflation hedge. Gold is working. Look at the chart from the last 4 years, and this is an uptrend.
BK, when you say it's become a macro trade, that seems like it makes Bitcoin less interesting. That's
I mean, I've always thought that ultimately, right. It ultimately Bitcoin, as it graduates from as it graduates into a full currency, the volatility is going to die down. There's going to be different players, different dynamics. So in terms of, are you going to have these up 300% years? Probably those days are going away. That doesn't mean the rest of the crypto you can't have it. But yeah, for Bitcoin, it's starting to die down. And everybody who didn't like the volatility and said it can't work because it's so volatile, now the volatility is dying down. Maybe it actually can work.
In your crypto portfolio, is the biggest percentage in Bitcoin still, or no?
No. Biggest percentage is in Ethereum right now and a couple of these smart contract platforms.